Hey, this is Mark here with Nagel's. I'm the crop insurance department and wanted to give you an update of some of the things that are going on. First of all, I want to talk about a little bit of agronomy. Corn this year, as many of you know and have experienced, got off to a struggle. We had some emergence problems, had some seed problems that corn just was really struggling getting up. Now it's starting to get its feet underneath of itself. And as you see here in this photograph, it's got 3 to 4 leaf collars. And at that point, if you cut the plant at the ground level, you'll see where the growing point is just now above the soil level. So now is the time when the ear development is starting, the tassel is starting to develop, the ear girth, the number of rows around the ear is being determined right at this point now. So it's very vulnerable to some physical damage if you got to be careful what you do out in the field. Yesterday we went around all of Delmarva looking at the wheat crop. I think we're going to have a very handsome wheat crop. It appears that the heads are fully filled out with 3 and 4 berries at each setting. Good plump kernels, and it's clean. Very little scab, very little frost damage, very little disease. The disease that's come in has been late, and I don't think it's really going to hurt yield. So we're looking forward to a good quality, high yielding wheat crop. Switch gears a little bit here. I want to talk about crop insurance. Once again, I want to remind you that your revenue protection price is based on a price of corn for $3.88 a bushel. And so what that means is that your dollar guarantee per acre is a combination of your APH, your coverage level, and $3.88. So the moving parts in this whole thing are your yield and the harvest price. Keep in mind that it's projected to be 95 to 97 million acres of corn planted in the United States this year, with a trendline yield of 178 bushels, means potential for a huge corn crop. Things look pretty good all over the United States. That could mean a lot of pressure on the corn price, particularly at harvest time. We could see prices of corn in the 330 range or below. And what that means is that as prices go lower, the potential for an indemnity on your corn crop increases. And the worst case would be that the harvest lows, which typically take place around the middle of September, is when you deliver your corn crop and you price it. But then as you look at this chart, you can see the average year, we've had lows about the middle of September, and then we've had a slight October rally. When the harvest price is discovered during the month of October, that rally, if you're out of the market, can start to erode of your potential indemnity. So we need to protect the possible indemnity through some marketing tools that are available. Once again, Nagel Crop Insurance, working with the Nagel Grain, is the only grain merchant in Delmarva that can utilize the grain marketing strategies with your crop insurance. So in our next video, Jay's going to talk about some strategies that are available to help protect that potential indemnity. Take care. Thanks.